Yeah,
Yeah, please go ahead now.
yeah. Good evening, everyone. My name is Pankaj Goyal. I'm one of the co-founder of company Capital Setu, which is trying to bridge the gap of credit and supply chain financing. And when I say supply chain financing, everybody would be aware about it. Definitely, we are having respected Mr. Dubbandan Naji, who happens to be the CGM for SBI. So when we say supply chain financing, this is one of the old product and one of the best product which is available in Indian market, despite of having uh, its qualities and every underlying merits. So it is not at all integrated too much, because when we talk about supply chain financing, there are multiple factors that it is available for the large entity which might be having good turnover or might be having extremely good credit rate. So before taking it forward, I would first of all, I would like to introduce myself. So I started my journey as a banker uh, with Capital First, then moved to HDFC Bank, then worked with the fintech company CoinTry, and then started my career as a chief risk and business officer for my last fintech company, Credo Chain, where we were part of cohort of IM Ahmedabad and IM Bangalore. And later, I was able to make system credit system, which was finally bought by DNB Dun and Bradstreet for $1 million. After trying my hand with multiple companies, I started my own venture, which was Capital Setu, and here we are, automating the whole supply chain financing process, not only for the large corporate but for the Indian SMBs. And when we say Indian SMBs include small and medium manufacturers as well as distributor to retailer. Because if I talk about biscuit industry, there are multiple supply chain financing option may be available to Parle due to its top line, due to its good credit rating, due to large pool of the dealers. But what about a bakery biscuit manufacturer? What about Periagol? What about Anmol Biscuit? So there are a number of entities which might not have direct access of supply chain financing due to their size and due to their credit rating, but still they are having that kind of business, maybe in a specific geography, maybe with very limited number of dealers, which might be in the range of 50 to 100, or maybe they were having very limited amount of turnover, maybe in the range of 25 to 50. So problem of Indian economy is that supply chain financing is only integrated less than 1% part of the GDP, but in other countries it is more than 14 or 15%. So clear indication is that 15 to 18x kind of growth is there. Also, in a recent statement by RBI, the RBI itself, the most conservative body, itself is saying that current embedded finance market is $3.5 billion, and they are expecting it to go to $50 billion by the end of March 26. So again, a symbol of 17 to 18x kind of growth is there. So everybody is aware about the number of MSMEs in India and what kind of contribution they are uh, con- uh, contributing to the GDP. And we also understand that approximately 84%. So only 16% people who are getting credit from the formal source, and 84% are still getting the credit maybe from the informal source, or might not be getting the credit. Still credit gap is there. And this number is huge. If I talk about current market and technical infrastructure, definitely bankers are very much keen. They want to capture the market maybe through NBFCs, maybe through fintech partnership, and so high number of NBFCs are there. But again, everybody think about the large ticket size, or when we go to the supply chain financing specific, then definitely it becomes a priority, because due to the complex nature of transaction, due to the complex hierarchy of the lending institution itself. Also, in the lending scenario, high CAC is there, the customer acquisition cost. So if I talk about customer acquisition cost, there are multiple model of acquiring a customer. As of now, there are two options. One is through the agent, and second one is through our in-house team. When it comes through agent, then it costs us around 3%. And when it comes through our in-house team, then also it does not cost us 2 to 2.5%. Also, I want to highlight each one of you that when it comes digitally, it even costs more than 5% because uh, multiple Google ad efforts, multiple other efforts, and final conversion number is extremely on the lower side. So acquiring a customer through the digital mode itself is very high. And if I talk about the current structure, the complete technical infra. So onboarding a customer is a different thing. We have seen PSB loan in 59 minutes. We have seen other scenarios as well. So acquiring it is very easy to acquire a customer through digital journey, but it's very difficult as on date on the MSME or the large business side. It is really difficult. It actually takes time. So, and if to automate, there are high price SaaS solution are available, but still business end up with high data days, cost of efforts and efforts on the collection part. So the market size, which I have already told you that the current size of BNPL market is $3.5 billion, which we are expecting almost 17-18x to the current value. And if I specifically talk about the supply chain finance ecosystem, then there are no product customization. So single policy maybe for the uh, corporate having 5,000 crore of turnover, and even if there is a corporate having 50 crore of turnover, but having different kind of rating, different kind of ecosystem altogether. And India is a diversified country, so we cannot see each and every corporate with the same kind of a lens. And definitely when these kind of challenges are there, then definitely customer experience can't be much better despite of expert bankers good intent and everything. There are high amount of NPAs, and in a term loan kind of environment, customer loyalty is hardly maintained because let's suppose if a customer has taken a term loan for 3 years, then definitely once he'll pay back, then he'll move to another bank. Then another bank come into the picture, they might be offering a lower rate. Then again he'll move to the different bank. So there are multiple complexities current supply chain financing ecosystem. Now, the capital Setu, how will be bridging this gap that we understand? Then definitely there is a gap. So we have introduced a concept called ENPL, now pay later, because as far as BNPL is concerned, BNPL is much more consumer focused, where consumer buy the goods on credit for its his own consumption. So we very well understand as on date a rickshawala driver or anybody can buy a mobile very easily. There are multiple kind of consumer durable financer, maybe the home credit, maybe Bajaj, maybe Capital First, maybe IDFC Bank. A number of consumer finance providers are available. And if he might be purchasing from Amazon, then definitely Amazon Postpay is there. But what about that retailer, or what about that manufacturer who is actually producing the good and want to get the fund just to buy the raw material? Though there are CC facilities there, but let's suppose that has been utilized, and now he's doing the business. So that kind of experience is not available. So that's why we are saying that pehle kamao kama kar chukao. So on now pay later concept we are introducing, where there will be a digital onboarding, a complete in-house developed limit management system, and real-time digital credit assessment system. Through my experience, and so I have made credit assessment system earlier as well, on the basis of GST bureau and banking analysis. The banking analysis has also developed in-house. Then there is order management system, supply chain finance system, where we'll be taking invoice, we'll be directly pulling the invoice from ERP of supplier, and then it will be validated by the buyer on the same system, and finally we'll be sending the same invoice to the lender for funding. And another system which we are providing, cash flow management system. Now I'll be telling you that how these system will be help the complete economic system. So so my point here is, as of now, if I talk about the corporates which are already part of supply chain financing. So I am simply talking about that 1% corporate which are now part of this whole supply chain finance ecosystem. So even if I talk to their CFOs, CEOs, I get to know a very amazing figure. They generally say that though we are having supply chain financing, we are having, let's suppose, 1,000 dealers, but not more than 150 to 200 distributor are part of the whole supply chain financing. So I got to know with a very good survey of more than 100 and 150 these corporates, in fact, A-rated, double A-rated kind of entities. So we got to know this thing, and one beautiful thing we got to know that not more than 15 to 18% distributor are part of the current supply chain financing process. So 80% are not part, maybe due to the credit parameter, they are not getting fit into the credit parameter of the lender, their geography norms are not meeting, or they themselves hold very good monopoly over the manufacturer and does not want to involve themselves into this process, because in a way here corporate is converting trade credit into financial credit and converting his credit sale into cash sale on day one. So this is the kind of luxury always available with the supplier. You might be thinking about what about the buyer. So in this chain, buyer will not be hampered because buyer will be making the payment as he was making earlier. In fact, he'll be getting additional leeway to pay the money, additional time to pay back the money, right? So we thought to why how we can make these 80% dealer distributor as part of our ecosystem, or apart from these this 1% number, how we can make other as part of our ecosystem, that other 80%, or the people who even or the corporate who even don't know about supply chain financing. So we thought of introducing order management system, because as of now uh, there are multiple e-commerce platforms. But what about a manufacturer who is having a RM who generally go to the dealer, then note down the order of dealer, and then finally give this order to his delivery department. So here dealer can directly place the order on the same system. Corporate can see the purchase order and accept the order on the same system. So it is simply digitizing their supply chain process without incurring any cost and without replacing existing accounting system. So it can be patched up with the existing accounting system, and by doing so, we'll be able to have access of their transactional behavior, and after understanding their transactional behavior, we'll be able to customize uh, will be able to offer customized products or customized supply chain facility as per their need. Another very beautiful system is cash flow management system, which will be out by the end of May. And this benefit of cash flow management system is that we all of us might have heard about a very renowned accounting software, Tally. So in India, more than 30-40 lakh people are using Tally. So this alone cash flow management system will be for the benefit of entrepreneurs, because entrepreneur or the promoter does not understand about the tally. It is the accountant who understands. But what about the entrepreneur in maybe on the road and just want to see कि आज sale कितना हुआ है, आज how much debtors are there, and if any of his debtor is calling that send me some more goods, or send me goods of, let's suppose, 1 lakh rupees, then he would definitely want to see actual outstanding as on date is how much amount, whether it is good to extend more credit. So this kind of feature are already there. So it is not like khata book where any kind of data is getting into the picture. It is the actual data or real time data of the business which is syncing at every 15 minutes. So any entrepreneur, uh, in at his own comfort, just tap on his mobile and can see that how much sale has been already made. By again providing this ecosystem, will be pushing him, why you are bothering your debtor, just assign your debtor to us and get convert your credit sale in cash sales on the day one, and ask your buyer to pay as per agreed credit terms. And how we'll be making money, how we'll be monetizing it for ourselves. So we have heard a very a beautiful term in this industry is cash discount. So when I was talking to few of the corporate, I asked them that how much cash discount you generally offer. Then they say yes, definitely we can offer 2% cash discount if, let's suppose, payment due is after 30 days. So then I asked, it is indirectly costing you 24% per annum. Then they said, yes, we know it, but for the sake of liquidity, we need to do it. But even after this kind of discounting, which they are offering, they are not able to get the payment. Everybody, the person who belongs to the financial background might have seen that in any of the balance sheet, we don't see that debtors are below 90 days or maybe the 100 days. So, for example, if a company is having turnover 100 crore, then definitely there would be debtor of approximately 25 crore, right? When debtor amount is 25 crore, so when he'll be entering into next year, he'll not be able to increase a turnover by more than 5 to 10%, because he is only having cash profit, which is not more than 2 and 3% to infuse in the business production cycle. But by introducing the supply chain financing system, we'll be simply reducing his debtor, and he'll get the payment which is logged into the debtors, and he can infuse this money into his production cycle. And I'm assuming demand is there, and definitely he can increase his demand. So by doing so, where he was only able to increase his turnover by 10%, now he'll be able to increase his turnover by maybe by 80 or 100%, and debtor day will be very low. And definitely when debtor days are low, valuation will be very high. So he need not to go for a debt arrangement, he need not to go for the equity. This is his own money which he can encash on any of the day. And how will be helping the people? So definitely we'll be offering interest according to their profile. Then for the lenders, we'll be giving month on month portfolio commitment. Also, one thing I want to mention, so some might be thinking that there might be high NPA number because as we will be entering into smaller manufacturing segment. But on the top of that, I also want to highlight, as of now, all the lenders available across the market are already offering unsecured term loan. So it is like that in case of a term loan, I am simply getting the money in my own pocket, my own bank account. Where I am using it, bank does not have any control over the same. And in this kind of transaction funding, we are having 100% control, because only after happening this transaction, we are releasing the fund not to the borrower, but in fact to the supplier of the goods. So in any of the transaction, money will be for a specific purpose. Let's suppose COVID again happens, business got hampered, there is no business in the market. So definitely there might be a chance that we are not making any money. But it is also 100% sure, because if business is not happening, transactions are not happening. And if transactions are not happening, our principal is simply lying in the account. So we are not making money, but at least principal is safe. So there will not be any kind of NP. Also, we are also taking 10% upfront FLDG, first loss default guarantee, directly from the corporate. And in this manner, we are saving down our risk, because as per latest number, trade credit default rate is not beyond 1.5%. And if I talk about unsecured lending industry, then average default rate is around 4%. So if we are having loss pool of 10% from the corporate himself, then definitely this NPA. So I can't say that NPA can be avoided, but number would be extremely minimal. And definitely we'll be having focus on the SMBs, because nobody is there to cater that. This is one of our USP, that in this space nobody is there to cater small manufacturers which are also having dealer. Also will be catering to distributor to retailer wala supply chain finance, which is also not very much explored in India. And if you talk about my go-to-market strategy, so I am being from the business background, I am simply having one very basic business sense, that if you are variable economic, even if you are in a startup which is even at the burning stage, so one thing we need to ensure that variable economic need to be positive. Definitely, there can be a sunk cost, there can be capex, there can be salary burden in 1 or 2 initial year. But but it is the duty of the founder or the management team that they need to ensure that variable economic need to be positive. So here will be acquiring the whole market through 0% customer acquisition cost. So there is no customer acquisition cost. I'll tell you how. So as we are entering into the partnership. As of now, when bank go into the market, they pick customer by customer, one by one, one by one. So let's suppose I have tied up with a brand, and now I am asking that I'll automate your whole collection efforts, because as of now, what corporate do, if their RM go to their any of the customer, they spend 1 hour with that customer, half an hour for the sale and half an hour for the previous collection. So now I'll be saying that I'll be saving down your half an hour. Also, the money which is simply lying on your balance sheet in 90 days, I'll be simply sending that money from your balance sheet to your bank account, which you can use to again to increase your production cycle. So in fact, he'll be bringing the customer to me rather than I am approaching him. He'll be bringing customer on my plate. Also, we'll be tying up with the multiple ERP service provider and B2B selling platform. Apart from Udan and this O business, there are no other platform which are offering credit to B2B buyer or B2B seller. So we'll be doing tie-up with them. So it would be again win-win situation for them as well, because they'll be able to increase their GMV. Uh, then we'll be giving these free to use SaaS system, order management system, and cash flow management system, which will be also again helping us to acquire a larger market. Then we are also having plan to launch ENPL card, Earn Now Pay Later card, for small and medium businesses. And we'll be also offering this system, because as of now, we also understand that most of the NBFCs will not be having that kind of automated system. So we'll be offering this system if they are funding our customer as free of course, which they can use themselves in their own ecosystem along with their server only. And this is a plug and play kind of a solution. For example, NBFC has decided that yes, they would be entering into supply chain financing from tomorrow. Then in the night itself, it can be integrated with their whole journey and within their ecosystem only. If I to do any kind of competition analysis, then definitely first comes into the picture trade system. There are three trades. One is M1 Exchange. Another is A Trades, which is subsidiary of Axis Bank. Then third one is uh, RXIL, which is again the subsidiary of SIDBI. But with the virtue of regulated entity, they can only cater one single transaction, which is MSME vendor financing, dealer financing, distributor financing, non-MSME vendor financing, distributor to retailer. All those financing options can't be explored due to the virtue of regulatory. And to the surprising fact, all of these three trade system or trade exchange are still in the laws. Then comes traditional bank, SBI and Yes Bank, which again the leader of the industry. So SBI again the leader for the public sector, and Yes for the supply chain financing, leader for in the private sector bank. But again, they also focus on the large corporate having investment grade rating or maybe the good amount of top line, because it is not even economical for them to set up a facility, supply chain facility of let's suppose 15 lakh. So it is not at all economic viable, and their hierarchy structure or legacy system even does not allow them to do so. Catering, if I talk about another segment, then Credex and Procap, they also tie up with in the specific segment for the bigger brands. So these are certain screens to show. I'm showing you mobile screens, and this is a preview of credit assessment system. So just want to tell you that within a matter of seconds only, if you have given your PAN number, I my system will be able to show you even if it is a 1,000 page CIBIL. With a single glance, you will be able to tell you that yes, there was a default or not. So this kind of underwriting system we have built in house. Then this is the invoice upload system, where invoice can be pulled directly from the ERP or can be uploaded manually as well. If I talk about our 2 year action plan, then in March, we recently launched our order management system. In May, we'll be launching our cash flow management system. We have already achieved disbursement of 150 crore of invoices. 150 crore is the number in rupees. 150 crore rupees invoices we have already disbursed, and we are our current AUM number is 70 crore. So we are targeting 100 crore fresh AUM in next 6 months and total 290 crore AUM by the end of March 23. December 22, we are planning to launch our ENPL card, and we are also planning to do export financing. So just want to tell you that how conservative we are deciding the target. As I am giving you target of January 23 for export financing, but today only I have tied up with Tradewind and Drip Capital for the export finance. So this kind of journey we are playing, and not only giving the numbers but also trying to deliver day by day. If you ask about unit economic, if I talk about the large and mid-sized corporate, definitely will be catering them. So I'll not say no to anyone if business is directly coming to me. So in large corporate, I have taken a very rough conservative estimate of the fees that I'll be getting simply 0.25 to 0.5%, and people might be getting even 0.6%, but I have taken a very conservative estimate. And as I would be going deeper, I'll be making more money. And definitely my sweet spot is this only. And so as of now, we are looking to raise approximately $1.5 million, where most of the money would be deployed for amount required to keep as FLDG, keep as security, because we'll be getting the security from the corporate in the form of FDLA. In response to that, lending to the lender, we also need to keep the security as FD. So that number can be uh, variable, because again it depends upon the business. So for example, any investor is thinking to start up with a $1 million, then definitely that can be picked up. But again, number the amount of AUM and the disbursement number would be lower, because the how much money I would be putting in the security, I'll be able to deliver that number only. And we are targeting 6,000 crore of AUM by March 26. And so this is all about. Thank you so much, and